Hello, Warriors. How's everyone doing today? Everyone doing all right? So, looking for my screen. Hey, Ryan, how are you?
Good morning, my old China. How are we doing?
Doing pretty good. So, nice little pop in Euro. So, I have confluence here at the return line for it to negate the throwover right here around 1040. Hasn't done it yet. You think we're going to get above this on the first attempt?
Not seeing your screen yet, mate.
No. Now?
Yeah, there we go.
All right, so you see that, big return line that it sliced through that you called with the fact that there weren't many options underneath the 110 level. Yeah. To me, this is going to be a false breakout above this 110.40 level. You think there'll be some willing sellers up here?
Yeah, I think so. We've seen it all the way up from 108. It rises and it gets hit, it rises and it gets hit. So it's certainly not out the woods yet. As we mentioned yesterday, it's stopped going down, which is obviously the first thing it needs to do.
First step.
First step. Yeah. How high can it go? It only takes one headline and we're back under 109 again. But it seems we're not getting anything worse, if you like, in the present situation. So the market feels a bit more comfortable. How high can it go? Anyone's guess. 110 is going to be the big test, and up, as you say, up towards that broken 1040-50 area.
Yeah. If
we get up there, we're already starting to see resistance into 110 naturally. Let's see what it does. I'm in the same mind with it going up as I was it coming down.
Right.
Driven by headlines. I'm not going to start calling bottoms or saying this is the end of it. Fill your boots.
Yeah.
Because it can all change in an instant, as we well know. But
your
levels, you go with the flow.
I know that I was saying that unfinished business and cable, it had to take out this low, so it's done it. I still think it wants to test the big round number here, 130, maybe 129. And one thing I think that you can't, I know it's not the end of the week, but you look at the weekly and EG, and that's a pretty powerful candle. I mean, if we take out last week's high, you have like a key reversal at new lows. So at the minimum, you have a reversal. I think that if they press Euro, even the new lows, that EG is bottom.
We've got the same situation here as we did previously. When cable was the volatile pair, Euro sterling gets affected on the volatility basis. If we look at the vols right now, 1 month at the money vols for the euro dollar is 10.22%. It was up at over 12% the other day. Cable is 8.97%. It's not often you see euro dollar vols higher than cable vols. So again, this is a factor. Is there been any major shifts in the fundamentals or central bank divergences between the UK and the ECB and the EU? Not really. So these moves again are more down to the conditions that we're trading at the moment rather than any fundamental changes, which obviously will come back into play should we get a resolution and things calm down.
Okay, so copper is following through. There's another pretty negative weekly signal if it finishes down here. So this was the first metal to go. Blake put out a great tweet that showed the high up here is like, I think 1.618, some type of fib extension target that was spot on. Huh?
Golden fib, I think it was something like that.
Oh, was it? Yeah, 1.618.
Yeah.
That's the golden fib. Yeah. So great call on that, Blake. I retweeted that one. And yen.
It's grinding.
Yeah, do it already.
Put it on a 15-minute chart and I'll show you what I mean.
Okay.
Dale.
Sure.
So, zoom that out a bit. You can see when this happens in this pair quite often, it just grinds. It just, for several days, it just goes and goes and goes and goes and goes and goes. Which to me, as you know, as Kman's mentioned and we mentioned, could be down to fiscal year end flows. We knew that the GPIF were bid down at 1450, down towards 1450. They could be stepping up their orders, which puts a support in below everywhere. So every time there's a dip, someone steps in and buys it. Every time there's a dip, someone steps in, and it just grinds higher. Where it stops, no one knows. We're running into a brick wall at 1600. We've got the highs above, resistance around about 16, 15, 20, then into those highs, that double top at 36.
Yeah.
So if it's going to make a move, it needs to break, that top side. Mainly break 1630. We've perhaps got something a bit more on the game plan than what we're thinking with just year-end flows.
1760.
Possible.
Maybe a hot CPI number could do that.
Have to be. I don't think unless it's going to come in 10%. I don't think we'll get it on this number.
How about yields here, bro? New highs, or when the Fed comes and does their quarter or half, it's going to be interesting if it doesn't make new highs, the 10-year after the Fed.
Yeah, it's. I think it's all down to the message. I mentioned yesterday, and I put a post in the room today regarding the problem for central banks. They're not looking at what CPI is in February. They're looking at what's going to happen in the next 3 to 6 months with all this conflict stuff and all this inflation kicker. This is a bucket of fuel on top of the inflation fire. Gas, oil, energy, commodities. It's not what a central bank wants right now. They were preparing policy for inflation as it is now. Now they've got to prepare policy for what it's going to be like in 3 to 6 months. Could be 10, 15%. We could be talking about in the next few months. That's what their policy concern is now. Yeah.
They're going to have to pull a mini Volcker. And after this close in the S&P's under 78.6, in your face bears. I mean, I would have thought after yesterday that we would tag this line. And the moves intraday yesterday were just, pretty wild. We had that midday rally. We went from this midday rally and then gave it all back. So, tough to be a position trader in almost everything. You have to take it when you have it. I'm wondering if you think, if copper is no good, and we're entering some type of corrective phase. Aussie looked like a false breakdown, and now it's rallying back. I'm thinking that this might be a high for a while. And would you take a shot at 61.8 back?
Yeah,
on the short side.
I've been surprised that even with the commods coming off, which looked to be the driver of sending the Aussie down from those highs, when copper rolled over, but then it's still lower and Aussie's continuing back up again. Is it again the safe haven play? Are we looking at the RBA again? And again, this is something we've been saying for a while, for a few days now. It keeps coming back. It suffers and then it comes right back again. So I wouldn't be surprised if we had another look up towards those highs, at least to 74 perhaps. If we hold the 74 level, then that's going to be a pretty strong signal that we've got to top around that 74, 40, 50 highs that we had the other day. Then we're potentially setting up for a new range to develop.
And, the market likes crude's down almost 5 here. So, here's your 2 hour. I think maybe we could make one more run if we don't break down here. I don't know what would cause it. I mean, we've heard all the news. I mean, it would be classic that crude topped on Biden banning all Russian gas imports. So that was here.
That makes it the buy rumor sell fact trade, doesn't it? Really, it looks a perfect case of that. And it's got plenty of room to move lower. If the dependence switches from Russia fairly quickly, and there's not going to be much fallout, or people aren't going to be short of oil, then there's no reason for prices to be up this high. But it's going to take a while for that shift to come into play, and it's just a risk pair. If tensions ease, that's going to be another bearish factor. I wish prices at the petrol stations came down as quick as it does on the oil markets.
Oh yeah, what they say, up on a rocket ship, down on a parachute.
Yeah, bloody profiteering tossers.
Yeah.
Dale, you always have a fitting expression, right?
You like that one, Steve?
Yeah, I hadn't heard of it.
All right,
good one.
Yeah, all right. Well, what are you thinking here, Steve? With what's happening dollar-wise, I know for a while you've been, waiting and for the dollar to do something wrong. Are we doing it here?
It's too early to say. We are trying to form an evening star formation, which, if that's the case, it is at least a short-term bearish signal, for sure.
Yeah.
But this market is still mostly driven at the moment by news, right?
Yeah.
And nobody, first of all, can predict news, especially when it has to do with such a volatile situation. Second of all, even if we post some kind of a top here, in order to actually turn bearish the dollar, we need to see a lower low, and we have some distance from here to where that would actually
You mean down here, all the way down here?
94.50 remains the key pivot area for this market, unquestionably.
Okay.
Right.
Yeah.
I think it's a very tough choice to be short the dollar under current circumstances. It can work short term. It will work long term, but the medium term is still very uncertain. So we have to take it one day at a time. And unfortunately, as I said, I never like it when that's the case. But when you are in a market that's driven by news, and news can come out literally at any given point in the day, you really need to be careful with what you're doing, right? Because there are a lot of markets out there that can easily, deflate in price or reinflate in price, depends on what you're looking at, in zero time. A lot of markets that look stretched, but given the right circumstances, they can become even more stretched easily.
Yeah.
Okay. Stel, I heard some of your bantering in silver.
Good morning.
Well, how are you, my friend?
I'm very well. We're talking about metals. We're seeing a pullback, and we've been talking in the chat from DSI has been in 93, 95.
Yeah.
Gold, silver, platinum. It's only natural that they pull back. Now the question is, are we lucky enough to get a decent pullback, like the low 1900s in gold, maybe if we're lucky 24 to 24.5 in silver? It could happen because we do have the Fed next week, and let's not underestimate the power of that. I think the market, with everything that's happening in the world, may be expecting or hoping for the Fed to be a little bit more dovish than a little bit more moderate. But inflation is just rocketing higher. It's going to be a lot higher next month and the month after. So how can they just sit there and say, have another excuse why they shouldn't be tightening? I don't see how they can do it. I mean, the ECB can do it. Obviously, they will say anything they can to avoid it being hawkish, but the Fed are a little bit different. And I think they're going to probably have to continue with the hawkishness. I mean, if you think about it, inflation extremely high, employment looking very good. So what's to stop them? And the markets are still relatively okay. We're still 4,200 in the S&P. We're marginally lower than where we were before Ukraine, or actually maybe where we were before Ukraine. So the markets, the stock markets are still okay. So why not say hawkish? So I think we might have a little bit of a surprise on the hawkish side, or maybe not as we won't get the slight dovish tilt that some people are expecting, and that brings another leg lower to metals, which I think would be a godsend to get long again. Yep.
I think, Stelio, the US markets are still horrifically mispriced. Given
in what?
you know,
Which ones?
the US markets.
The US stock markets.
Yeah.
Yeah, I agree as well. But something's got to give at some point.
You know the saying, markets can stay rational far longer than we can stay sold.
For sure.
Yes.
For sure. And people should never forget that.
I think there's a risk. I think there's a growing risk that the Fed go 50 next meeting.
Yeah, I wouldn't disagree with that. Before I was thinking, you know what, going 50 before Ukraine started and oil went to $120. I was thinking, why panic the markets? You can do 25 on every single meeting this year. Obviously, it won't be enough, but you can do that. And forward guidance just say we're going to keep going basically for a couple of years until inflation comes back. But now with oil there and energy there, it's a guarantee that inflation is going to go higher. So I think perversely, this Ukraine situation is making them a bit more nervous and a bit more anxious to get going. So I agree with that. I agree.
I think that's something we have to watch, because the market expectations dialed down on rate hike expectations. 50 BPs have been wiped out. The ECB not going to hike for further into the future. I think that's a big market risk coming, because if they go harder and faster, the market's not prepared for it.
Now the question is, if you think they go 50, what's a trade? What do you think is the best thing to do?
Sell equities.
Yeah, I would say sell equities and actually sell bonds as well, because I think bonds are going to crap the bed.
Yeah, dollar likely jumps, but we have to be careful of the details, how they phrase it.
Yeah.
That's obviously key. But on the initial reaction, the initial announcement, if they do hike by 50, we're going to see yields jump. We're going to see the dollar bid, stock sold off in that initial reaction.
Ryan, I can already tell you my assumption, and I have very high confidence in this. I don't think there is a scenario where they can hike 50 and compensate by having less hawkish language. I think if you see a hike of 50, the language is going to also be leading to faster hikes.
Wait. So what you're saying, Steve, and good morning, everybody. What you're saying is, if the Fed front loaded a rate hike, like said, we got to compensate for this jump in commodity prices when you have, look at wheat, for example. Let's pull up wheat. Oops, let me get over to, let's look at wheat futures. I'm just going to look at, I'll just use the CFD really quick. Here's a great example. You have this move that you see here in wheat. You don't think that the Fed could front load it and say, hey, we had to do it because we need to make sure we hit this inflationary force with a blunt stick right now, but we're going to continue to raise rates in the future at more of a measured pace? You don't think that can happen?
Absolutely not.
Why?
You have to put things in context. We currently have rates at 0, inflation at 7.5%, with now a huge probability, if not certainty, that it's going to accelerate higher in a very fast pace. 0.5% of interest rates can do nothing about that inflation. And trust me, they know it.
It's about optics, right? I hate using that term because it's very overused right now, but it's all about like the Fed's behind the curve. We understand we're behind the curve, so we're going to hit the curve with a blunt stick, and then we're gonna get in front of it now. So if the Fed wanted to say we're going to raise rates by 0.5 basis point, and they do that, then and they say they're going to stay on top of it by measuring rates or raising rates higher, then I think it's possible.
I think it's not.
Well, I think it is.
Okay. That's what makes a market.
That's what makes a market.
Yeah.
Exactly.
So, but I think it's totally possible. I think,
okay.
and remember, the Fed. And one of the things that maybe it just shows my age. I've been in front of the markets many times where the Fed will do surprise half basis cut hikes and cuts in mid-meeting all the time for no freaking reason either. So, the Fed is very capable of doing things and being unpredictable. I mean, maybe you guys that have been watching the Fed for the last 10, 12 years have really, just relied more on a reliable Fed, but I've been around when they aren't. And I'm sure some of us can actually remember that pretty well.
Let me jump in the middle of both of you guys. I agree that they need to hike hard to, as you say, hit it with a blunt stick.
Yep.
The problem they have is how far do they go before they run into the problem of stagflation? Because we've still got the supply issues and they've been magnified by this conflict, especially in Europe, and that's going to spread because Ukraine is a big logistical center. A lot of Ukraine workers work out of Poland in logistics. They've lost truck drivers, as the guys in our room have noted. Supply issues aren't going away over this. So the Fed have now got this extra inflation dump coming, and they run the risk of having to hike to show they're doing something, but they're also going to run into this stagflation. And if stagflation starts, if the economy starts crumbling because of the demand drops because people can't physically produce stuff, they're going to start cutting jobs. Factories are going to start reducing wages and things like that. The thing grinds to a sort of slow halt, and that's going to happen in the midst of the Fed hiking and inflation running 8, 9, 10, 11, 12%. Stagflation will hit them like a brick wall, and then they've got the question: do we keep hiking on inflation, or do we cut rates and protect the economy? And that's a conundrum to come.
Agreed, and I think it's now almost unavoidable.
I think so too.
Yeah, I mean, I think I agree. I would agree. I think stagflation is unavoidable at this point. It is.
We were saying months ago, late last year, and when I joined the crew, stagflation this year is a problem, but it was a balancing act. It could go one way or another. It was a coin toss. Now I think it's a near on certainty.
Yep.
So, okay, let's talk about things that you can make money with. So, instead of theorizing about what the Fed's going to do, we got CPI here in just a few minutes. What are you guys going to do with the CPI data that comes out? I mean, we've got this euro that has recovered. I think one of the reasons why it's recovered so well. And by the way, we are at the breakdown point of the previous wedge. Which
hold on, is the CPI today or tomorrow?
No, tomorrow, mate.
Yeah.
Oh shoot! Wait, is it?
We had Mexican CPI, if that's what you're talking about.
No, is it? I thought it was Wednesday. God. Well, hey. And that's all right. The building's on fire. Wait, it's not.
Fun fact: the Mexicans report the CPI to 2 decimals.
Oh, we got. You know what? Wait. We do have. Wait, hold on. Let me just.
We have jolts later on.
Yeah, you know what? I was thinking today was CPI. I don't know why I was thinking today is CPI. All right.
It's
well,
okay.
You know what?
It's usually on a Wednesday. That's why.
Huh?
It's usually on a Wednesday.
It's usually. Is it usually? I always think it is on a Wednesday. Okay, so we have CPI tomorrow. So let's talk about it. So we have this euro that's recovering. We're almost back at 110. If you can, just zoom out of here for a second. Here's like your wedge breakdown point at 110. It's a big figure number. We're back at the at 110. One of the reasons why the euro's recovering because I think there was a headline, and correct me if I'm wrong, and you guys in Europe would have seen this, not me because I was sleeping at the time, that Russia has reported they do not want to overthrow the Ukrainian government, and that's like one of the things that it's like, oh well. Okay, you're trying to invade and occupy and blah blah blah, but you don't want to overthrow the government. That's a good thing, and the market's really taking that in stride. So we've got this recovery in the euro. You can see it recovering all over the place. We've got a big pullback in gold. For those of you that queued off of the gold big figure, 161% extension. That number. Yesterday and Dale, I heard you earlier talking about that silver, but here's gold. There's a golden fib of the 2-year range here, or year range. We hit it and reversed really hard.
Show that tweet.
What's that?
It was right there when you were tweeting it.
Oh yeah, I tweeted about it right at like literally we were at 2065 or something like that. And you know, so you follow the ForexAnalytix account if you guys, you know, want my technical analysis is not on pipzar.com or pipzar.com. That too. I don't use my Twitter handle for technical analysis anymore. I just do use the ForexAnalytix account. So I still tweet on Pipzar, but I try to put all my charts here. And so, yeah, right when we hit the 161% extension, matter of fact, if you were using ForexAnalytix, I put in a pattern in play yesterday, right here at the 161% extension yesterday. So those that showed a reversal, but you know, here we are. The gold's right at support. Actually, I think a lot of things are pushing some pretty key levels this morning. So what do you guys going to do with the market here now that we're here?
I just want to say one thing regarding today's headline about Russia.
Inflation?
About Russia.
The CPI
it's a good
today?
thing. No, I'm going to say that, but I'm just going to say it's a good thing that Putin would never lie about not wanting to overthrow a government. Now, inflation.
You're right. He would never mislead the public, right?
Yes.
Okay.
CPI tomorrow, 7.9% expected year on year. I think we're going to have an 8 handle, and I think that's going to be rising. So I think we're going to have probably going to have a little knee-jerk reaction, which will bring, I think, bonds lower, probably metals lower, and the dollar higher. So I think, yeah, what were we going to say?
I was going to say, but that doesn't help me right at this moment. How do I make money with that now?
Good question.
Do I sell the euro here at 110 or do I wait for it to get to 111? What do you guys think?
I've just sold it at 98. Just a little scalp. Just a little scalp.
Big man named Ryan. All right. What's that?
We'll see. 110.15 and 110.15 and
all right. Well, Steve, what are you going to do with the euro here at 110? You a seller here or you a buyer here?
I think the closer we get to 111, 111.20, the better the selling opportunity.
Okay, so in other words, you're going to let Ryan suffer for another 100 pips before you jump on the bandwagon. Stelios, what are you thinking here with the euro?
I think we should. I think selling it ahead of the number is a good idea, but not yet. I would probably wait for something like 110.50.
Okay, all right. So you know, and I don't know if Kman's here. I haven't heard him this morning, but I was
listening to you guys all the time.
Hey, Kman. I'm sorry. I had to step away from my desk. So let me ask you this. I'm gonna turn your attention really quick to the dollar yen. Dollar yen hit 115.80. You know, if you watch, that's not here. If you watch the Morning Edge, which is the webinar in 45 minutes for the ForexAnalytix subscribers, we go through all these asset classes or all these, you know, instruments right here. Then Steve and Stelios go through even more and address questions. I've been literally writing 115.80 and 116.35 for it must have been like, you know, last 2-3 weeks or something. So I know this is really big. I'm keenly aware that this is really key resistance at, you know, right at these levels. Let's just move that down. Right at these levels, key resistance right around here. And then 116.35, we're developing a bullish wedge inside of a channel that's heading higher, that's pushing up against the 117 multi-year trend line. If you guys are not all aware of this, then, you know, you should probably join ForexAnalytix and join in our discussions that we do every day. Every single day we do top-down analysis with all these instruments. But I got to ask you, as a, you know, somebody who traded at a bank, you know, at one of the major world banks in Japan for 5 years on a trade desk, at the end of your, you know, 30+ year career, and you know the yen very well. So, Kman, what do you do with the dollar yen here? I mean, we're right up against resistance. It looks like risk is rallying. My gut instinct is sell some yen because I think we're going to make it up to 116.35 and maybe, you know, try to probe to 117. But with CPI tomorrow, are you willing to take that risk? What do you think about the dollar yen right now?
Well, if you're not in a position, I would watch it here. But I'm long, as the people in ForexAnalytix know. I'm long from 115.35 again. I've been offloading a few around this 115.80, and then now see what happens with another third left of my position, and then see up to where we can push. I think the main importance, of course, is going to be the Fed and the BOJs right after the Fed next week as well. I think we can push higher into the end of the fiscal year, at the end of the month, but then all options are open. I'm even thinking of, if we get that last push up, which would lead us to 117 or around there, even to try and buy an option to the downside, because the new fiscal year may see a change in the Bank of Japan rhetoric. Because inflation is going up finally, and they might take this opportunity to start to change a little bit of their, what is it now, decades-long zero interest rates policy. Especially the new guy in the Bank of Japan arriving is less of a dove than the other ones were.
Maybe he's less of a drinker too. So, all right, Kman.
Kuroda will compensate.
What's that?
Kuroda will compensate.
He will. I remember when that guy was drunk at his desk and asleep. That was fun. That's always fun.
Captain Charisma.
All right. Hey, thank you so much for your input there, and thanks for your input, everybody on the team. Steve, Stelios, Ryan, Kman, and Dale, as always.
If I can just add, I'll be a rally seller on the euro dollar as well, because I think the whole story is not over. This is
so you're going to join Ryan here. You're not going to let him suffer for another 100 pips before you jump on board.
I actually sold a tiny here, and I will continue like 110.25, 110.40, and yeah, I'll try to get short.
You know, just really quick, I know, Dale, you got your interview coming up. The one thing I do have to, I want to state that if you listen to the week ahead video, I warned of a euro bounce or consolidation, and I think we're at those levels now on all these crosses where we've bounced pretty aggressively, or I say pretty aggressively. Let's just take that into, let's look at the move here. Like, this is the Euro New Zealand, right? Huge move. We haven't even gotten back to the 24% retracement. But remember, if we're in a bearish trend here, we should stall and just consolidate until there's any like clarity on a ceasefire, really serious de-escalation. You just have to be careful trying to chase these euro currencies higher. I think that, when you're talking about the euro dollar at 110, and you can hear the guys in the ForexAnalytix team are starting to nibble on the short side. You're going to be running into some technical issues as we get up here above 110, and just realize, like I said, unless there's a serious de-escalation, ceasefire, something like that, and you guys are going to have your opinions on whether Putin is even capable of that or not at this point. That's totally your opinions, but I'm just going to tell you that unless we see a de-escalation soon, the euro is probably going to be facing some headwinds moving here shortly. So anyway, I just want to say that. Remember, if you guys haven't taken advantage of the trader funding program, make sure you do so. This is we have people that are jumping on board so they can access larger account sizes. You have to take an assessment. The assessment fee is a one-time fee. But if you can get through it, which multiple people have just over the last couple of weeks since we've launched it, you get to access larger trading accounts, and you get to keep 75% of the profits, which if you've ever done any type of prop trading, that's unheard of. So just go ahead and watch this video right at the very bottom of the Trader Funding Program site. I'm going to go ahead and click that site, put it over here in the chat box, and then I'm going to let Dale take over. Thanks, team.
Thank you.
Cheers,
guys.
Thank you, guys. Hiya, Kathy. Welcome back to F.A.C.E.
Good morning, Dale. Thank you for having me. Happy New Year.
Happy New Year, and different market conditions since you and I have been talking. We were in bull trends, and over the last, I don't know, it seems like it was a long time. It's only been 60 days. Things have changed, and I'm wondering, with what you do, And you remember how to share your screen, Kathy?
I do.
Okay.
Yes, sir.
That there probably are there many new listings in this environment that you're paying attention to, or are there older ones that have been pressured that look like attractive entries here?
Yeah, well, let's get into it.
All right.
You know, I remember last year at the new year when we talked, I was in this waiting game, and I remember telling you I was optimistic maybe 6 months from now, from last year in January. And then when we met again, you know, I saw some good prospects, you know, and I was excited. I was sharing that with you. And now, you know, all those prospects are down in the dumps.
Yeah. So even though the averages don't reflect it, I'm sure there's some things you're following that are down 50%. That
right. And I'm going to show some of those statistics today. Really quick, I wanted to show some of the top IPOs of 2021. And this is the third column is the percent gain from their day one closing price as of March 4th, or just last week. I mean, Zim, obviously, transportation stocks been doing well at 646%. But I mean, if you look at all these other percentages, I mean, the next highest is 60 all the way down to 8. And the really shocking thing here is that no other IPOs from 2021 have posted gains from their day one closing price and trade more than $20 million a day. You know, we've talked about that liquidity requirement. So there is not a lot of good stuff out there right now. But that's no surprise to anybody, right?
Okay. So I don't know if I ever asked you this before, but can you take short positions?
Well, sure.
I mean, you know, I'm just saying that, you know what to look for that makes something a very good candidate for a long-term buy. Do you have anything, system that would tell you that you could be short this thing for a while and just flip it?
So unfortunately, I am just a long equity trader.
Okay, that's what I thought.
Yeah, I'm not, I've always, I've told you this many times, I learned from William O'Neill, and I guess I don't want to miss when things turn around. And I'm not saying I'm taking a break, because I'm still screening every week, of course, but there is a little less work in this time where everything's down and you're just looking for, the one or two that are popping up, versus when everything's popping up and then you really got to pay attention to what's going to be the next one that's going to move first. Does that make sense? Yeah.
And, some of these markets are definitely correction territory. I mean, there's some that are in bear markets. So, and I also know some very smart guys that think that we're setting up for a rally to new highs. So what's your next slide, or what things are you monitoring in case the market does get its footing, even though we're in this war that I don't know if there's going to be anyone suing for peace, and this ends? And how about things that have taken advantage of sharply higher commodity prices? I would think, when things get fashionable, Kathy, all of a sudden there are companies that are associated with groups that are in bull markets that are getting the headlines. Anything, say, for example, in the mining space or in the oil space, as far as IPOs, that think that there'd be a good time to launch an IPO with, the tailwind?
Yeah, well, IPOs, you want to come out in strong markets, right? So that's why, in 2020, we had a lot of strong IPOs. In 2021, we had a lot of IPOs too, right? Because it was building off of 2020, but it just didn't work out. So an IPO has to have really great fundamentals, really great sales to come out in a really bad market.
Okay, yeah.
Otherwise, they don't have any momentum to keep them going. And as you know, most IPOs don't necessarily have earnings when they first come out. Maybe they have sales, but some of them even have sales. So it's really hard for an IPO to be successful in a market that we're seeing right now. And what I wanted to share here, I'll just jump to this slide here. I mean, of the 427 IPOs, and this was, we got this data from MarketSmith, only 48 of them, right? So 11% are, again, trading above their day one. So they're all below where they first came out. And then, how far below that? Well, 42% of them are 50% or more below their day one closing price. So, I mean, these are just all, you could say, I mean, some of them did have successful
launches,
initial IPO advanced phases before the market turned. They did well in the short term, but they're all way below 50%. And then here from their peak prices, if they even did have a run up, you see here, almost 50% of them are 50% below that peak price, and 28% of them are 75% below that peak price.
All right. So what do you do with those issues? Do you wait for a trend to change and start getting some trend reversals? Okay, there you
absolutely. I am looking for a trend change, and most importantly, in the NASDAQ and the S&P. And you mentioned the mining stocks, you mentioned oil and gas. I mean, they've definitely had some good setups, and if that's your thing, there have been things to buy to make some money in. But if you're focusing on IPOs like I am, I'm not necessarily going for those oil and gas because I'm waiting for those setups, and there just hasn't been any. But when I talk about trend change, I just want to share, I'm looking for the 10-day, just simply the 10-day, to be trending up again, the 21 EMA. And right now the indices are way below that. As you know, yesterday we almost cut, we might undercut it today. I don't know what's going to happen. But what I'm doing and this is probably an every other day, definitely weekly, just because everything's so down in the dumps. I'm screening IPOs from 2019 to 2022. And again, $20 million a day or more traded. And only 41 are over 100. I wanted to highlight that. So, I mean, the liquidity, the quality, and I base the quality on liquidity, right? So how many dollars traded? Only 41 as of yesterday were over $100 million a day. Most are still trending down, and they're well below that 40-week moving average. So I'm looking for character change, new, organized, constructive consolidations. When I look at a chart and all I see is a downward sloping line, I don't get excited.
Okay. So what do you mean by new organized? That some of these IPOs may be absorbed, or that they may go ahead and bring something, purchase something and change the character of the IPO?
Yeah, exactly. And so I thought a good example would be F.A.C.E. F.A.C.E was one that, we thought was going to be a complete, disappointment, never come out. It was, we call this a pump and dump, where it just goes straight down. And that's what a lot of these IPOs look like right now. I mean, Coinbase looks like this. Robinhood looks like this, And so at some point, hopefully it kind of bottoms. Again, we call this that institutional due diligence phase. And, people could, maybe be trying it as it's coming back up. But here's that first little indicator. This is a gap up on earnings. And then here it, created a base, but still a long one, right? I mean, there's going to be a lot of overhead resistance, as this, I'm pointing out here with this turbulence zone. But I'm going to be looking for a constructive base. This is a large one, but that's okay. You want to see things like that. And this could be like, a first entry that I'm going to be looking for, and see how it tightens up, and then it starts its run and eventually gets past that turbulence zone and still runs a little bit more. So this is what I'm looking for, Dave. I'm looking at these downward trends, and I'm waiting for them to start to go sideways, hopefully look for a pop, and then start looking for those first stage bases. Okay.
So you're going to trade these, like F.A.C.E. How about IPOs that did something like F.A.C.E. did, but you get a big pullback in F.A.C.E. That could be a break to buy? So it no longer qualifies as an IPO.
Oh, okay. So you mean like maybe Zoom or something like that?
Yeah. Yeah, so some of these stocks that, you know, have really pulled back, you may have had great trades going before things turned, and now they pull back to, you know, IPO levels or during where the market was during prior in the due diligence phase. Are those candidates for you? Or they're not IPOs anymore, so they don't qualify?
No, it's a great question. And, you know, IPOs can be strong for, you know, maybe even up to 8 years, right? I mean, I think Bill O'Neill used to say 6 to 8 years, new companies, those are the ones you want to look for. And here I even have some annotations. This is Market Smith. You know, I was waiting for Zoom to possibly trend change here. You see, I was drawing, maybe it was going to be a double bottom. It kept going, of course, but for sure, I feel like it is possible. Definitely. I mean, we've seen it where we've had stocks with great runs, and then they have to consolidate and almost in a way create another due diligence phase. Okay, it's had its great run. Its earnings aren't as good. Can it reinvent itself and come back? Those gains that digested, and then they totally come back. So that's why I'm still screening from 2019 even to 2022, because again, some of these, this is IPOs. Zoom specifically was one that came out in 2019. So I'll definitely be looking for that as well. But as you can see right now, it's still on a downward trajectory as well.
Okay. Well, I know none have qualified for you to be compelled to buy them. Do you have a few issues that are on your monitors that you think could be something that could qualify when the trend changes?
Yeah, definitely. So the one I was thinking about sharing was Docs. You see, I have some alerts here that I had created. You know, it had a really good earnings pop. I mentioned that before. Earnings usually is a good earnings. A pop can be a change in character. And it was very tight there for a while. I was monitoring, you know, the high level closes and the volume associated with it on that earnings. But, you know, it's kind of fallen back in. But this one, I got to say, is at the top of my watch list. You know, we'll see if it holds. Other ones have not been this strong.
Would closing back
this
over
is the only one that's at the top of my list, though, I have to say.
So there's so few candidates. If we started trading above that prior to highs at 60, a little over 60, looks like you have a little red line there, or else I have to clean my screen. Up there.
This is the 20. This is the 21. No, this is the 30 simple moving average. This is the weekly chart.
Would that be a goal for you?
Yeah, so what I would be monitoring is specifically, this is the earnings week gap bar. So I'll be monitoring where it closed on that week. And then of course the high, and this is when I'm going to be watching it to see, you know, what it does. And, you know, it still hasn't even actually, well, maybe it did undercut it a little bit, but I'm going to be watching to see if it can stay in this range and even tighten up some more. You know, I like that it still has some good accumulation here. You know,
it's still way above its IPO price.
Yeah, it's still above its IPO price.
Yeah.
And this is a level you can check too. I mean, the weekly close of the first week, you know, 55.98. So that could be a level to watch. But you see, and we've talked about this, you know, this is where that's where it's going to struggle. So yeah, it's got to get past here, maybe tighten up again. And then of course the turbulent zone will be another area. But if it tightens up below that, I'll definitely be looking to potentially add if the RS stays strong, and of course is one of the ones that actually is going sideways or up.
Well, maybe this is a good time for people to prepare, since there aren't many and they're out of favor, you know, to be a contrarian. Maybe it's time when people are turning very bearish in the equity market. I mean, you haven't seen this kind of pessimism in a long time, for people to pick up your book and look for straw hats in the winter.
Exactly. This is a great time because, you know, you have this bottoming, and this is what a lot of them look like. but they're going to start popping up, either earnings or some kind of news or whatever. And then the ones that can pop up and then go sideways and create a nice little base of some sort, that can be a potential first entry. And then that, in conjunction with maybe the NASDAQ trend is changing, then you've got more things in your pocket that say, okay, this is potentially going to turn around.
Okay, let me ask you this. So we've had markets break, and we could have very sharp bear market rallies. In fact, perhaps one is developing right here from yesterday's lows, and the S&Ps could rally back to 4,600. Most people don't think that could happen, but you're not going to get a follow through to new highs and exceed new highs. Is that still the environment where it's not as much of a long-term hold, but maybe you lower your expectations on what can happen and your holding period if we're in, say, a two-sided market, which we weren't for a long time?
Yeah, absolutely. I mean, you have to give what the market, you have to take what the market gives you. So if if not all the arrows are pointing in the right direction, and you like to trade, and you can get the little pops here, 5%, 10, 20%, whatever it gives you, and take it for sure. I'm with you.
Yeah, like this example, Kathy, maybe it doesn't have new highs over 100, but it could rally to 80. Is that something you would look to participate and be a little, maybe tighten things up and be a little quicker to take profits in this environment?
Dale, I was definitely, I have the alerts here. I was definitely trying this here, but then I got shut out because it didn't hold. And actually, I just thought of another one. This is Victoria's Secret. It looks horrible now. But it actually looked like it was constructive here, even popped up a little bit. And so this was another one that I was trying. I don't really necessarily know what's new about Victoria's Secret. They've been around a long time, but I was looking for something, right?
There are sanctions on lingerie now.
Yeah, there you go. And but then it didn't work. So here we go. We've got it undercut the whole structure. This is typical. So I gave it a shot. It didn't work. But this one and Doximity are the only ones I've really tried to do in the last couple of weeks, and just had to cut my losses. Okay,
why don't you show your website, Kathy, so people know where to find you and follow and learn from you. So
thanks, Dale. Well, me and my co-authors and the interviews we've done are all on our website. I can't seem to figure out how to bring it back up to the full screen. But anyway, thelifecycle.com. I'm also on Twitter, and I'm on LinkedIn. And if people have questions, I can do my best to answer them through one of those avenues. And I really appreciate you having me on. It was really interesting to prepare this for you, because I had no idea, because I hadn't really run the numbers, how few 2021 IPOs there were this year. It's just crazy. That were successful, that were successful.
All right. Well, a lot of things I see on my screen are like, Doug Casey, Crisis Investing from the 70s. but you have the patience, and sometimes you just have to be a spectator instead of a speculator. And you have the wisdom to know that. And I appreciate you coming in and saying there's not much to do. Because a lot of people will, even if there isn't much to do, will say there's a lot to do. So
you always have to be ready, right, Dale? You have to be ready, because it can change in the snap of the fingers.
It can.
So maybe your research doesn't take that long, but you still got to do that research, because you don't know when that one's going to pop up.
Don Henley, in a New York minute, everything can change.
There you go.
All right. So thank you so much, Kathy, for being here. Everyone, you could follow Kathy on Twitter. There's her handle at KGD_investor. I recommend you go to her website and check out the book, because bear markets, just like bull markets, don't last forever. And perhaps when we have another turn back to the upside, you'll be prepared to diversify away from, just spec stuff like currency trading and gold trading and S&P trading, and put something away in your 401k or pension that could work for you for a long time. So I appreciate your sharing your knowledge with us again, Kathy.
Dale, I appreciate it.
And also hope that action picks up for you, and that
yeah, definitely for all of us.
And great trades ahead for you, Kathy.
Thank you.
Always rooting for you. Kathy Donnelly, everybody, co-author of The Life Cycle Trade. You can find her there at thelifecycletrade.com. Follow her at KGD_investor. Thank you, my trading warrior sister. Nice to talk to you.
You as well. Thank you.
Okay. That's a wrap, everybody. You could join the team in 20 minutes on the Morning Edge. Good hunting. And remember, don't just count your pips, count your blessings. See everyone tomorrow. I have a gold bull that has finally seen its heyday. James Henry Anderson will be with us tomorrow. Adios, everyone. Bye-bye.